all members' opening statements will be made a part of the record. The chair notes that some members may have additional questions for this panel, which they may wish to submit in writing. Without objection, the hearing record will remain open for 30 days for members to submit written questions to these witnesses and to place their responses in the record. We will now go to our opening statements. I am pleased to be holding this very important hearing examining ongoing concerns over the United States Mint's bullion coin programs. Given the financial difficulties of the last few years and the possibility of large-scale inflation due to the Federal Reserve's quantitative easing programs, it is not surprising that many investors are rushing to purchase gold and silver coins. As the world's largest mint, supplying one of the world's largest markets for bullion coins, it is imperative that the mint be able to supply the bullion market with an adequate quantity of coins. Our witnesses represent various sectors of the coin industry, each with a unique viewpoint, and I look forward to hearing their perspectives on the Mint's bullion coin programs and their suggestions on how to improve the Mint's efficiency. For planchet shortages and minting stoppages has often been focused on the Mint and its procedures for planchet purchases, coin marketing, and bullion sales. In a market as potentially volatile as the precious metals market, and given the Mint's status as a self-funding agency, it is understandable that the Mint does not want to store millions of ounces of precious metal planchets whose dollar values could conceivably drop by the time they are minted and sold. However, this uncertainty and the cyclical nature of coin sales makes it difficult for planchet suppliers to gauge future demand, meaning that they are less likely to invest in capital equipment to increase production. Thus, with a huge upswing in demand, as we have seen recently with Silver Eagles, the Mint is unable to source enough planchets, and the rush to produce enough 1-ounce planchets leads to a reduction in resources available to produce 5-ounce planchets, proof planchets, etc. Silver and gold are in an unprecedented bull market right now, with Silver Eagles selling at a rate that, when annualized, would mean sales of 48 million coins this year. Considering that total American silver production is only around 40 million ounces, this would be a significant sales figure, making it all the more important that the Mint minimize disruptions. I look forward to the testimony of our witnesses. And now I will yield for an opening statement to the ranking member, Mr. Clay.
Thank you so much, Mr. Chairman, and thank you for holding this hearing regarding the U.S. Mint's bullion coin programs. And thank you to the witnesses for appearing in front of this subcommittee on domestic monetary policy. After reading the witnesses' testimony, I look forward to their insight regarding those problems they have identified at the U.S. Mint and what corrective measures should the U.S. Mint make to address these problems. Also, I noticed that no representative of the U.S. Mint is appearing in front of the committee for this hearing, and at this time, Mr. Chairman, I'd like to reserve the right to have a comment period so that the U.S. Mint can make comments in regards to this hearing for the record. And thank you so much, Mr. Chairman.
Thank you. Does anybody else care to make an opening statement? Okay, we'll proceed to hear our testimony. I would like to welcome the panel today and looking forward to hearing their testimony. And without objection, your written statements will be made part of the record. You will be each recognized for a 5-minute summary of your testimony. I'd like to go ahead now and introduce our panel. And we have 4 panelists here today. First, we have Ms. Beth Deisher, is in her 26th year as editor of Coin World, the leading publication of collectible coins. She is author of Making the Grade, a grading guide to the top 50 most widely collected U.S. coins. Ms. Deisher is often interviewed by the media as a coin collector spokesperson. We have also Mr. Terence Hanlon, president of Dillon Gage Metals Division located in Dallas, Texas, one of the largest metals dealers in the U.S. and an authorized purchaser of the U.S. Mint. A leading expert on precious metals and gold coins, Mr. Hanlon has worked closely with the world's major mints and is called upon by gold and silver councils for market and product evaluations. We also have Mr. Ross Hansen here today. He is the founder of and CEO of Northwest Territorial Mint, the largest private mint in North America and an authorized retailer of U.S. mint bullion coins. Mr. Hansen has been in the precious metals business for 35 years and in 2009 acquired the Medallic Art Company, a minting facility that used to produce silver blanks for the U.S. Mint. Mr. Raymond Nessim is CEO of Manfra, Tordella, and Brookes Company, a precious metal wholesale distributor and authorized purchaser of the U.S. Mint and an official distributor for government mints around the world. Since the 1960s, Mr. Nessim has held positions with various firms managing and directing precious metal investment. Once again, I would like to welcome the panel, and we'll proceed to the first witness, Ms. Deisher.
Thank you, Mr. Chairman. I would like to thank you and the subcommittee for inviting me to testify here today. During my career, I have been privileged to chronicle the U.S. Mint bullion coin programs from their origin in the research and recommendations of the Gold Commission in 1982 to the passage of legislation authorizing the American Eagle gold and silver bullion coins in 1985, to the gold bullion coin first strike ceremony at West Point on September 8, 1986, and then through the twists and turns of the ensuing 25 years. Since CoinWorld's largest constituency is comprised of collectors, my testimony will articulate the views of collectors, who often are also investors. The quality of the silver, gold, and platinum bullion coins produced by the U.S. Mint is exceptional. However, the marketing of these coins is subpar and often disruptive to the marketplace. Most of the Mint's problems in marketing bullion coins are rooted in an ongoing failure to understand who its customers are and why they purchase the bullion coins. In my written testimony, I have cited a number of problems. In this short time frame, I would like to emphasize solving those problems and making the bullion coin programs better. These recommendations include: the U.S. Mint should avoid purposely creating rarities. The U.S. Mint should spend time and resources to better acquaint its marketing staff with its various customer constituencies for bullion coin products. The U.S. Mint should better inform its customers as to when its coin products are going to be available in the marketplace. The U.S. Mint should mint to demand by allowing a certain number of days for collective versions of bullion coin products to be purchased and or ordered. The U.S. Mint should increase bandwidth for its website to facilitate the handling of high-traffic ordering periods. The U.S. Mint should secure more planchet suppliers and better plan procurement and manufacturing so as to avoid disrupting profitable and popular coin programs. The U.S. Mint should exercise care in scheduling bullion coin sales so they are more evenly paced throughout the year and not dump into the marketplace near the end of the calendar year. The U.S. Mint should take a more active role in providing the public with consumer alerts regarding any of its products that might be subject to questionable marketing practices in the secondary market. The U.S. Mint should place mint marks on all of its bullion coins to identify the mint of manufacture. Such would preclude misrepresentation and possible fraudulent practices in the marketplace. We will also recommend that the U.S. Mint create a standard protective capsule option for housing all of its collector version bullion coins. Thank you again for the opportunity to testify, and I would welcome any questions that you may have.
Thank you very much, and we'll go on to Mr. Terence Hanlon. Go ahead and proceed.
Chairman Paul, Ranking Member Clay, and members of the subcommittee, I would like to thank the subcommittee for the opportunity to appear before it today to discuss the United States Mint's Bullion Coin Program. It seems appropriate for Congress to take stock of this important program at this time, as 2011 marks the 25th anniversary of the introduction of the American Eagle bullion coins. Congress created the world's most successful bullion coin program with its passage in 1985 of the Statue of Liberty, Ellis Island Commemorative Coin Act, and Gold Bullion Coin Act of 1985, which authorized respectively the American Eagle silver and gold bullion coins. Since the product launched in 1986, the coins have become the dominant bullion coins in the global market for physical bullion coin investments. Dillon Gage Metals is one of the largest precious metals dealers in the United States. Our Dallas-based firm is proud of its affiliation with the United States Mint as a key distributor of its American Eagle gold, silver, and platinum bullion coins. We look forward to the introduction, hopefully later this year, of a palladium coin to the program as a result of Congress' passage last December of the American Eagle Palladium Bullion Coin Act of 2010. Over the past 25 years, the Mint has produced bullion coins of exceptional beauty and quality. Their marketing team has built a strong brand for the Mint's bullion coin line of products, which are recognized and desired the world over, and has established an unrivaled distribution network. The Mint is to be congratulated on these accomplishments. This is an extraordinary time for the global precious metals market, as demand for these metals climb and prices are at or near record highs. This demand can be traced back to the international financial crisis that began in 2007 and further fueled by economic uncertainty, jittery equity markets, and the looming threat of inflation. Many investors in physical precious metals products prefer the size and convenience that coins offer, as well as the imprimatur that the National Mint provides. Overwhelmingly, investors choose the American Eagle bullion coins, and they do so for three key reasons. First, the coins' weight content and purity are guaranteed by the U.S. Mint and the U.S. government. Secondly, there's a liquid market for these products because of an established network of authorized dealers that ensure a two-way market. Thirdly, the exceptional beauty and quality of the coins make them desirable. As a result, at times the Mint has exceptional demand for its gold and silver products, but it has at times been unable to keep pace with the demand due to an insufficient supply of coin blanks. This has led to disappointed customers and resulted in market share losses to other Mint's bullion products. The Mint has taken steps to address its supply difficulties by adding additional capacity, but it still struggles to meet demand, particularly for the Silver Eagle bullion coins. An adequate supply of blanks caused the Mint to forego production in 2009, an inadequate supply of proof versions of the American Eagle gold and silver coins because of a requirement that gave priority to the production of bullion coins over proof collector coins. Fortunately, Congress addressed that problem with its passage of the Coin Modernization, Oversight, and Continuity Act of 2010 and provided the Mint the authority to produce collector, uncirculated, and proof American Eagles, even in times of unprecedented demand for the bullion versions. The Mint also experienced problems with its rollout late last year of the American the Beautiful silver bullion coins. The problem highlighted weaknesses in the communication between the Mint and its authorized purchasers and the broader retail dealer community that the Mint relies upon to sell its products to consumers. The Mint should be encouraged to work more closely with its distributors and to have regular dialogue with them. In doing so, it will help the Mint to better gauge the market conditions for their products by hearing firsthand from those making the markets for them. The anticipated introduction of a Palladium American Eagle coin this year will bring a new dimension to Mint's bullion offerings. It will offer investors an attractive price point in relation to silver, gold, and platinum with different supply-demand factors for the material. I believe investors will welcome the Mint's resumption of the production of the Platinum Eagle this year, which the Mint halted at the end of 2008. Additionally, it would be fitting to mark the 25th anniversary of the American Eagle program with production of a 4-coin collector set comprised of a gold, silver, platinum, and palladium Eagle coin. Congress could give a further competitive edge to the American Eagle bullion products by adjusting the capital gains tax treatment on these investments to make them on par with securities. The 1981 passage of the Economic Recovery Tax Act created a category of collectibles within the Internal Revenue Code, which includes precious metals. This change in the tax code caused precious metals investments to be taxed at a different rate than that of investments in equities. As a result, current tax law imposes a maximum rate of 28% on long-term gains on precious metals bullion investments rather than the maximum 15% levied on securities and mutual funds. By lowering the rate, Congress could substantially boost the market potential for the American Eagles. Again, I want to thank the subcommittee for the opportunity to be before it today. I would be pleased to answer any questions you may have.
I thank you, Mr. Hanlon. We'll go on to Mr. Ross Hansen now.
Thank you, Chairman Paul and Ranking Member Clay and members of the committee. My name is Ross Hansen, and I am founder and CEO of Northwest Territorial Mint. I have personally been in the precious metals business industry for 35 years, and I founded Northwest Territorial Mint in 1984 as a full-service integrated mint. We are the largest non-governmental mint in North America, and we not only produce our own brand of bullion products, but we are also a retailer of a number of different governmental bullion products, including being an authorized retailer of the United States Mint bullion coins. 2 years ago, I acquired Medallic Art Company, which was at one time a primary producer of silver blanks for the U.S. Mint. And in full disclosure, my company makes a number of challenge coins for all levels of military, many government agencies, including numerous members of Congress. Because of my experience in the private sector, I've been asked to testify before this committee regarding the bullion coin program of the U.S. Mint. As you may know, the U.S. Mint began its program in 1986, but it's only been in the last 3 years that demand for the silver American Eagle bullion coins has exploded to unprecedented levels. Many social and economic factors have contributed to this dramatic increase in demand, not at least of which is the public's perception of an imploding U.S. dollar. In recent years, the U.S. Mint has often been unable to meet the increasing demand for its bullion product. The frequent shortage of these products has led to the following problems. Number one is the premium charged by the authorized U.S. Mint distributors have fluctuated wildly. 2, sales have been lost, which decreases the amount of revenue to the U.S. Mint. 3, the bullion programs of foreign governments have been allowed to penetrate into the U.S. market. And 4, the protection problems have created a widely held negative perception of the U.S. Mint. The cause of the Mint's inability to make enough bullion products to satisfy demand can be traced directly to its supply chain, specifically its supplies of silver blanks. For example, up until recently, the United States Mint was using a single source for its silver blanks. This single source had known limitations in its production capacity and could not expand its production to meet the Mint's needs. Rather than working to develop a domestic pool of vendors for these raw materials, the U.S. Mint has contracted with the Perth Mint in Australia, half a world away, to make up the shortage. Any business would recognize that this adds to the cost of the material, transportation, and significantly increases the length of delivery. I am not here today to merely point out the obvious shortcomings of a program that I have a high regard for. Instead, I would like to see the American Eagle Bullion program continue to grow and succeed. For this to happen, I offer the following solutions for your consideration. Number one, the U.S. Mint should create an industry advisory group comprised of experienced minting industry professionals who are intimately familiar with the material and processes employed by both government and private mints. This group should include suppliers of both the equipment and raw materials that are used by the industry. This group would be distinct from an existing advisory group that deals with coin design issues. The group I am proposing would help with coin production issues. Two is the U.S. Mint should engage in an aggressive vendor development program to assure that it has multiple domestic suppliers to meet the Mint's growing needs. Three, as part of the vendor selection, the U.S. Mint should ensure that its vendors have an elastic capacity. That is, they have the ability to expand production and supply blanks as needed. And four, the U.S. Mint should maintain a larger inventory of bullion blanks and finished coins in order to better respond to surges in demands for its product. And five, the U.S. Mint needs a change in attitude. They often have displayed an attitude which used to be attributed to the phone company of, we don't care, we don't have to. Their attitude towards vendors and authorized purchases is often described as surly and arrogant. It is my opinion that these recommendations, if implemented, could help to make a good program into an excellent one that would fill its congressional mandate to produce high-quality bullion products in sufficient quantities to meet the demands of an ever-changing market. Thank you for letting me share my thoughts with you.
I think the gentleman will go to Mr. Nessim.
Mr. Chairman, members of the committee, the subject matter being bullion coin programs of the United States with a question, how can they be improved? The answer to the question will always be yes, they can be improved. Established measurable goals can always be improved by means of flexibility and transparency. Silver Eagle's recent short-term supply probably is caused by domestic fabrication capacity of silver blanks. This issue may be addressed by extending some flexibility to U.S. blank fabricators in order to help them invest in additional capital equipment for increased capacity. Maybe flexibility simply in the form of a minimum quantity order guarantee per annum for a certain period of time. With regard to the America the Beautiful silver coins, the issue was not that of distribution, but rather that of supply. The United States Mint has effectively built up great anticipation for the new 2010 silver America the Beautiful sets. Expectations were that the Mint would mint sufficient quantities to satisfy potential public demand. Instead, the Mint announced only in December of 2010 that they were able to fabricate only 33,000 sets. As wholesale distributors, the day we were notified of our allocation, we proceeded to sell part of our allocation to several retail dealers, as we normally do. Later that same day, or maybe the following day, we were informed by the Mint that allocations were canceled and that they will relaunch the program, accept orders on December 10. The smaller than expected mintage prompted some retail dealers to offer these coins on their websites to the retail public at very high prices. We had to cancel our sales agreements, which placed us in a very embarrassing predicament. To protect the U.S. public from potential price gouging, the U.S. Mint issued new directives on December 9th, 2010 to the APs, requiring them to A, make available for sale directly to the retail public all their allocations, limit profit margin to no higher than 10%, enforce a limit on coin design and sale for each household, not sell any such coins to neither own company officers nor employees. Despite the problems which this has caused, considering, in our opinion, that the Mint has done the right thing and made the right decision, These directives created three problems for us, namely, 1, risk of being accused of price fixing, 2, not be able to hedge the silver content of our purchase, which is our norm, consequently be left exposed to price risk decline, 3, as wholesale distributors, we were not adequately equipped at the time to sell one coin, each design, for each household. Under the circumstances, the Mint acted promptly, decisively, and did what it had to do to counteract delayed production and limited mintage. If there are any lessons to be learned from this experience with reference to can they be improved, maybe providing APs with a reasonable price notice change or mintage problems. Minimize surprises by means of regular, open, transparent communications with the APs regarding marketing plans, fabrication, or minting obstacles, or any other difficulties. And C, allowing the Mint more flexibility by lifting some legislative restrictions, allowing them to operate a little bit more like a commercial entity. In conclusion, and in our opinion, the current middle management of the Mint, be it bullion procurement, precious metals, contracting, production, or manufacturing, consists of very experienced, qualified, and dedicated individuals. What appears to be void in our experience is a senior chief executive with sufficient authority to act and report to a political appointee and to a board of directors comprised of a cross-section of specialists with commercial experience, U.S. blank fabricators, and U.S. authorized purchasers. Thank you.
I thank the panel, and we'll go into the session for questions. I'll yield myself 5 minutes. First off, I would like to mention one of the reasons I think we're here today and we're concerned because we have a shortage of coins and there's a high demand and the Mint hasn't been able to keep up. That seems to be the major problem. And then the question is raised is how things are distributed and how things are managed and what is the responsibility of the Mint. But in many ways, what we're talking about here is a reflection of what we're doing to our money. I mean, this shortage is a consequence of the debasement of a currency. Of course, there was a time when there was fixed exchange rate between the paper and the coinage when the coins had actual value, gold or silver. And in the 1930s, in 1933, of course, there was a devaluation of major proportions, and a dollar went from 1/20th of an ounce of gold to 1/35th of an ounce of gold, and then gold was made illegal, and it was fixed for a long, long time. In the 70s, we had two fixed devaluations. One, it went from 1/35th of an ounce to 1/38th of an ounce of gold, and then it was redefined 2 years later in 73 to 1/42nd of an ounce of gold, and then after that, the debasement of the currencies went to the marketplace as gold was legalized. So we've had steady debasement of the currency, and now, as some of you have already mentioned, the economy has a lot to do with people are worried and concerned, and how do they preserve their wealth? So there's been a high demand for silver and gold to the point where now there are shortages. But the problem is a technical problem on how to deal with this, but ultimately, you had a sound currency. This would be a non-event. It would be a non-problem. But right now, when you think about the debasement of this currency, it's been horrendous. 1/20th of an ounce of gold to 1/1460 percent of ounce of a gold. I mean, that is huge debasement of our currency, and people are struggling and just wondering, what do you do when a government does this to its money? But anyway, I would like to see it facilitated, that people can help take care of themselves, because before 76, it was illegal to do this, to actually buy coins and buy gold coins, and then you went to jail if you bought a gold coin. But I do want to ask a general question to the panel, if you would. I know you've touched on this already, but just if you could briefly explain to us the distribution network. how does it work from the time the Mint does something and until I can go get a coin in my pocket? Would one of you volunteer and describe to me exactly how that works?
Sure.
Mr. Hanlon.
Yeah, I'd be happy to. The Mint has authorized purchasers, of which we are one. So the product comes from the Mint to us as an authorized purchaser, and we have the responsibility of making a two-way market, both providing that product to dealers who are providing the product directly to the retail customer. And as well, we have a responsibility to make a buyback that is reasonable, so the spread between the bid and the ask is a reasonable number, close number. So it also maintains a liquid market. So it takes 3 steps. It comes to the authorized purchaser. We then distribute to the dealer, sometimes a wholesaler who will distribute one more time. But normally we're selling to the dealer who is providing that product to the customer. That ranges from coin dealers, banks, brokerage houses, pawn shops. It's a fairly liquid market at this point.
Is there a buyback arrangement with the Mint, or once you buy them, they're yours?
No, the Mint strictly sells. Right. They do not.
Okay, another quick question. Right now, I understand that I can't go to the Mint and buy bullion coins. Would there be anything wrong with that?
Well, the Mint's not capable of handling that. First of all, they can't handle a two-way market because they'd have to hedge their position, which they have absolutely no experience or knowledge in. It would be overwhelming, actually, for the Mint to take that position. The spreads would be too wide if they did get involved in it. Yes, it would be wrong.
But they still sell proof sets. Is that correct, the Mint?
The Mint still sells
to individuals.
Numismatic products to individuals, yes.
Okay, my time has expired. I yield to the ranking member, Mr. Clay.
Thank you, Mr. Chairman. And Ms. Deisher, in your December 20th, 2010 editorial in Coin World, you called on Chairman Paul and members of the subcommittee to review the Mint's handling of the 5-ounce silver bullion coin program. In that editorial, you noted that the 2010 production numbers were significantly lower than the network of authorized purchasers had anticipated. You wrote that such low mintages will produce a speculating frenzy smacking of contrived rarity, and it is incumbent upon the U.S. Mint to produce sufficient bullion coinage to satisfy demand. So I am sensitive to the fact that the U.S. Mint fell short in that respect. However, I was pleased to see in Mr. Nessim's written testimony that in his view the U.S. Mint took appropriate mitigatory actions to address the very speculating frenzy you referred to. While I would hope we can find a way for the U.S. Mint to address the supply issues, I am pleased that the Mint took action to protect the U.S. public from potential price gouging, which Mr. Nessim described as the right direction. I would also welcome any suggestions from the witnesses as to how we can ensure that the Mint is able to supply investor and collector demand. Finally, in fairness to the U.S. Mint, I would like to ask for unanimous consent to enter into the record an op-ed from former U.S. Mint Director Ed Moore that gives the U.S. Mint's perspective on this story.
Without objection.
Thank you. Ms. Deisher, in your written testimony, you recommend that the U.S. Mint should take a more active role in providing the public with consumer alerts regarding any of its products that may be subject to questionable marketing practices in the marketplace. Can you give me an example of the type of questionable marketing you refer to and how you think the U.S. Mint should address them?
Well, one of the ongoing problems that we have seen is the secondary market making products of what they call first strikes. The U.S. Mint has said they do not keep track of the first coin struck. What they do is put tracking numbers and information on packaging slips. And these go to the grading services, and the grading services are looking at the low numbers saying, aha, this is the first coin struck. Well, in the collector market, that is a magic thing, to have a first coin struck. What we're seeing in the market, and you see it on the cable television programs all the time, they're asking huge premiums and saying these are the first coins struck, when in fact they're not. The Mint issued a consumer alert, one in 2006. This continues to be a problem. In fact, there was a civil suit against one of the grading services in Florida, and that company settled out of court and paid quite a bit of money. But other services continue to do this, and many people pay huge premiums for something that is not. And we would like to see the Mint be more proactive and make the public aware that there is no way that they know if the coin is the first one struck or not. This is one of the areas that we feel that the Mint could be much more proactive.
I'm sorry. What is your opinion on limiting the newest coin to one household, to one purchase per household? Was that effective, or?
Well, what it does is encourage speculation. For instance, in the America the Beautiful, they limited the bullion product to 33,000. This is a pattern we've seen with virtually every new product. They will have some type of limitation because the market has built up a great enthusiasm. Whether it's a production problem or whatever, there's a limited. And therefore, speculators go in, and only if you got one per household. But I can assure you, probably on the Mint's mailing list and some of these people who were told to sell them like that, the dog in the house had an address, the cat in the house, and every cousin in town had an address. There are ways to get around that. These artificial one per household things don't work. So the solution is to work ahead of time, to understand what market demand could be. I have to tell you that we follow virtually every world mint that produces coins. We don't see this problem in any other mint.
Thank you. Thank you, Mayor.
Okay. I yield 5 minutes to Mr. Lukenmeyer.
Thank you, Mr. Chairman. Mr. Hansen, I'm just kind of curious, can you tell me just how volatile the market is, and if we oversupply it, is that going to have an effect on it? Can we oversupply it based on demand, or can you just give us a little educational background on it?
On some of the collector coins, yes, it can be oversupplied, and we've seen that on that issue. On the bullion market, the bullion market is a very volatile market. All of us dealers can attest that depends on what's happening in the financial markets. Our sales can fluctuate wildly. But if the U.S. Mint carries a larger inventory, it can help with some of the supply shock.
Who would bear the cost of that increased supply of inventory?
Well, the U.S. Mint is actually quite profitable when it comes to making their bullion products, and if there was an additional cost, it would be quickly made up by the increase in profits.
They would just pass the cost on, is what you're saying.
Right. The U.S. Mint, in my best estimate, loses about a third of their sales are lost because they can't supply to demand, and a small increase in production would give substantially more sales, which would then provide the profits to afford that.
Okay. Mr. Hanlon, in your testimony, you talk about perhaps changing the tax rate from 28% on collectibles which include precious metals, down to 15%, which is there for other securities and mutual funds. Can you tell me how much would this increase demand? How much kind of a cost would this be to the government, or how? Give me what you think would happen here if we did this.
Well, as far as the mint's concerned, it would benefit greatly because there are multiple people who would love to purchase precious metals as an alternative investment to the standard securities. So
if you did this, perhaps would the demand for the product go up 10%, 40%?
In today's conditions, I would say 30% to 50% would be very realistic.
Okay, that begs the question, then, because one of the problems we have right now is that obviously the mint can't keep up with the demand as it is. So how would they keep up with the demand in your scenario if you increase the tax benefits?
Well, that would include all the precious metals, specifically gold and silver, but platinum and palladium have gained a lot of attention because of their continued liquidity in the market. The fact that the U.S. Mint offers any product makes it that much more popular, makes it that much more liquid. But if you take the ETFs, the exchange-traded funds, for instance, and you see the amount of money that's been invested in that as an alternative investment to securities, it's a massive number. That number in itself, I believe, would be doubled as well if the capital gains tax benefit were applied to that, which it should be. It's ludicrous, actually, that it's not.
Okay, Mr. Nessim, very quickly. In your testimony, you indicated that the mint, whenever they are selling the bullion to authorized purchasers, they limit your profit margin to 10%. Is that correct?
No. This was only applicable to the America the Beautiful silver 5-ounce coin. Okay, limit the profit. So, but they are limiting your profit on that particular issue? Yes, correct. But the other issues, other coins that they mint, there is no limit on the profit? No, they're limiting the profit on the America the Beautiful simply because we are requested to sell directly to the public, which they never do on the other bullion coins. Very good. About running out of time here, I just have one quick question. How does our mint activities and coinage compare to other foreign countries? Apparently there's other foreign mints that you're competing against or working with or selling other products. How do we can you give us a quick gauge on that? Yes, I'm sorry. Yes, they are excellent. They produce more than any other mint. The quality is excellent. Also, the other mints produce a very good quality, but the U.S. Mint is by far the largest fabricator of coins. Okay, thank you. I see my time's about up. Thank you, Mr. Chairman.
Thank you. You have 5 minutes to Mr. Green from Texas.
Thank you, Mr. Chairman. Thank the witnesses for appearing. Also thank the ranking member for his great work in helping us with these issues. Members and witnesses, excuse me, let me ask a question about the platinum blanks and the $50 silver proof blanks. Is it true that the only manufacturer for these products is in Australia?
I can best address that as
yes,
the only manufacturer here. No, there's a number of manufacturers that could be done here in the United States. The U.S. Mint just hasn't sought them out.
If I may, let me thank you for that. But rather than get to that point, and we may get there, the question really has to do with what is currently the circumstance. Is it currently the circumstance that this is the case?
I believe that's correct.
Only Australia. And I think you were about to indicate that it could be done within the United States, notwithstanding the fact that it's not being done within the United States. Is this correct?
That's correct, sir.
Okay. Now, is it true that until about 1981, we did have a presence in the marketplace with these products? Does anybody happen to remember about when it occurred?
Are you saying the U.S. Mint was producing its own blanks?
That we had the blanks for the platinum blanks and the $50 silver proof blanks. Isn't it about 1981 when we ceased to do this? Yes, ma'am.
The American Eagle Bullion Coin Program was not created until 1986. silver was taken out of American circulating coinage in 1965. So the U.S. Mint's refineries in silver planchet production really ended in the 60s. It was not until the Bullion program was created actually in December of 1985, and it took them a year to gear up, but no precious metals coinage had been produced by the U.S. Mint or struck by the U.S. Mint during that interim.
How do you account for the absence of a U.S. company in the marketplace with these blanks?
Well,
Could I help address that, Mr.
Well, if I may, the lady may have an opinion that I'm interested in. I'll give each of you an opportunity. I'd like to hear the lady's opinion.
I'm not sure I understand your question. Are you referring to the
Right now we have
Bullion blanks?
We have an Australian company that produces the platinum blanks and the half-dollar silver proof blanks.
Yes.
We don't have an American company that's doing it.
Well, we're aware that there are American companies capable of doing it.
I understand, but
we do not know.
I understand. Okay, if your answer is you don't know, I accept it.
We have asked the United States Mint, and we have not gotten a clear answer.
So you don't have an opinion as to why?
I do not.
Okay, let's move to the question now. It really is, why is it that it's not being done in the U.S.? I understand we have the capacity and we are capable, but tell me why. Yes, sir.
May I answer?
Well, no, the gentleman that's next in line. I'm going down the line. I'm sorry.
Well, Ray and I deal from the same perspective, and I believe that the answer is that the specifications for actually making the blanks for platinum coins or the silver or the gold are fairly stringent, and that creates an issue, according to the Mint, for those who are willing to meet those specifications in exchange for the
because
profit
the yellow light's
made
on, let
on
me
that
go to the
particular
next
product.
person. Can you give me a brief response, sir? You were going to give one earlier.
As the only manufacturer here, I can just tell you simply, the U.S. Mint has not been responsive to requests from my company or others to do the blanks. They don't develop their vendors within the United States.
Mm-hmm. There are some who contend that this goes back to budget cuts in 1981. Is there any connectivity between the budget cuts in 81? Anybody see any connectivity?
No, sir.
Okay, the next gentleman, please.
I believe it's a matter of economics. Our parent company is a fabricator of blanks, and we have proposed and offered and sent samples to the U.S. Mint of our blanks. And their specs are very high, and their prices are very advantageous, meaning they would shop around and get the best possible price. And from an economic standpoint, if it makes more sense to bring it in from Australia or anywhere else as compared to manufacturing them here, it should be done.
Your time has expired.
My time has expired. Thank you.
I yield 5 minutes to Mr. Lucas from Oklahoma.
Thank you, Mr. Chairman. And Ms. Deisher, let's run and gun here a little bit in this 5-minute timeline we have. Would you explain to the committee in the briefest of terms your comments about why mint marks are important, not just to collector coins, but bullion coins, and why for 2,000 years mint marks have been important?
Yes, sir. It shows the mint of origin, and sometimes there are unequal productions at the facilities, so it could possibly create a rarity. But the reason I went to this, especially with the new coin programs coming on and in the additional silver, is the problem that I identified on the packaging and the likelihood that secondary market could abuse this also. So it's very important, and it was historically the case that the U.S. Mint always identified, or pretty much identified, especially in its precious metals, its gold and silver coinage.
As have most mints for 2,000 years.
Yes.
Second question, the Mint's website. You comment about the bandwidth. I assume that means the ability for people in these rush periods to get online. From your investigations as a reporter, what kind of capacity do you think the Mint has, and what kind of demand at key points have they had? What's the the ratio in their present configuration?
It's my understanding they're working to increase that, but I can tell you every time there is a new collector product offered and you go to the website, people sit there for hours trying to get in, and you can't. And then you call on the phone and you're backed up. I don't know what their peak capacities are, but what happens, I know of instances where people will pay people sitting at home to just sit there for hours and hours and hours to try to get in to buy products. And this is ongoing. This has been happening, I remember in 2007, and it was horrendous for the first spouse programs.
So it's not just a one-time anomaly, it is a
No.
regular problem in peak order periods. Would you touch on the effect, the entire panel's discussed this 33,000 coin issue and starting and stopping in. From your perspective, not only as a reporter, but in a business that sells advertising and watches these various enterprises, could you give us a little insight into the economic impact that this start, stop, sputter situation in this particular case had on real world businesses?
Well, I would like to submit for the record comments of one of our advertisers, Mr. Mike Fulgens, and he very clearly talks about you have to place advertising months ahead. He lost several $100,000 in the anticipation it would be business as usual, trying to get advertising placed in our publication and others. When the Mint director had been talking about they expected 100,000 of these sets to be produced, and this was like in July. It wasn't until December that we learned there were going to be 33,000. Well, of course, that created a frenzy in the market. They have another 27,000 blanks that they've decided to make into a collector product. This same thing is going to happen in probably 6 weeks, and it will be actually a greater problem because of the low mintages. These kinds of things, from a collector perspective, if you can't start at the beginning of a program, you're discouraged from ever participating in it again. It's a pattern that we've seen over and over where somehow there's a limited mintage set up for the beginning of a program, there's wild speculation, and then people just get discouraged and stop buying the product on the collector side.
Could you touch for a moment on the Mint model, and then I've got a question for the rest of the panel. Historically, 1792, the Mint was set up. You brought your precious metals in, you paid a small fee, and they turned it into the appropriate coins of your request. And then we went away from, I guess the term would be free coinage, to a process where the Mint was a government enterprise stamping out things, meeting demand as requested by the Treasury. Now, in recent years, we've changed that business model again to a more business-oriented model, correct?
Right.
Part of the proceeds go into the revolving fund. Would you offer any observations you might have on how going from the previous model where whatever they did not benefit their operating fund to a model now where the more products moved, there's some benefit to the Mint's fund itself? Could you expand on any of that?
Certainly, the model that came into play in the mid-90s is much more efficient, and I think it gives the Mint flexibility to plan. Where we see a failure is to plan to avoid the crisis management type things. It might need some refinement. It's definitely the kind of model in today's world.
One more minute. If the chairman will tolerate me just a little bit more. The old lament from the 80s prior was they didn't want to do anything. Now the lament is, because of the different model, they want to do so many things that the typical collector might not be able to buy all of the options they offer. Is that a fair observation from the folks in the country?
That's a fair observation. When I did an editorial back about 7 years ago, if you purchased one of everything the U.S. Mint produced that year, it would have cost $3,000.
Impossible.
We did the same analysis this year, and it was over $10,000. And because they're not producing platinum, that it would be even higher if they had those. So to be a complete collector today collectors are really priced out You have to select a series if you want to be complete. You can't be a completist today.
I appreciate the chairman's indulgence on time.
I thank the gentleman. And without objection, the statement Mrs. Deisher referenced will be placed into the record.
Thank you, sir.
And now I'd like to yield 5 minutes to the gentlelady from New York, Mrs. Maloney.
Thank the chairman for yielding and for this hearing. We certainly want to have high quality coins produced, but on the panel I believe we have only one person from the private sector, Mr. Hansen, who is working in this area. So I'd like to, and I understand in your testimony you came out and said things that you thought the qualifications or demands were too onerous. So I'd like to ask you, what are the factors you would encourage Congress to consider in creating any future bullion coin program? You cited ensuring sufficient blank suppliers so that one coin program's production does not affect the supply of blanks for another coin program. And are there other recommendations that you'd like to speak to that you believe would be an improvement on the part of government?
Mrs. Malone, I believe that the onerous comment about the blank quality was made by Mr. Nessim, not myself. But the U.S. Mint does have high standards for their blanks. We have always met those standards. The standards are really not that onerous. The U.S. Mint has a very arbitrary system of accepting blanks, and in the past when we've supplied blanks to the U.S. Mint, we never had any problems with quality, and but it has been used as a weapon to kind of limit the suppliers. The U.S. Mint kind of has it in their mind who they want to supply blanks with. The problem isn't with the quality issue. The problem is the U.S. Mint just recognizing that they need more than one supplier, and they just need to open it up. And they should be made in the United States, not overseas. We're providing American jobs.
Well, let's do it. Thank you. I still have some more time.
Yes, you do.
Oh, I have some more time. Okay, great.
You know, if I could just make one more comment on it, Medallic Art Company made a substantial investment of many millions of dollars before I acquired them in getting ready to supply the blanks for the U.S. Mint, which they had done for many years, and they were just universally rejected, and no logical reason was ever given. They were just basically told, thank you, but no. And that's one reason I acquired the company, is because the previous owner had no market for the products. And if the U.S. Mint had accepted as a blank supplier, we wouldn't be sitting here today. We could supply all the blanks the U.S. Mint would ever need.
But then when you got the business, you got them to accept your blanks, right?
No.
Really?
In fact, I've had many discussions with the previous Mint director, told him I could supply him with blanks. He just smiled and said, oh, okay. And I asked him if he would like to come out and tour our facilities, and there was just deadpan response.
So how many companies are supplying the blanks now in America?
Well, there's only there's one primary supplier, which is a company in Coeur d'Alene, Idaho. They recently added a second one in the United States, which is in Rhode Island. But the two major suppliers are Idaho and also the Perth Mint in Australia.
Australia?
Australia.
Why are we giving preference to Australia?
That is a question directed to the U.S. Mint.
And when they don't have competitive bidding, they don't have they just say no to you. They just say you can't do it, and they don't give you any reason?
That's correct.
Well, Mr. Chairman, I think we should inquire why, and see if we can have a competitive bidding to get the best product at the best price. Okay. And Mr. Nessim, it was your statement that you thought that the standard was too high. If you want to explain that.
No, it is not too high. It is high, but it should be high, and it is comparable to other major mints.
Well, then, if I could ask you, Mr. Hansen, if you can't sell your blanks to the U.S. government, who are you selling it to?
Well, we have our own line of products, and we have about 250 people that work at the Mint, and we we make a lot of products for Congress too, and the U.S. military, and we have a very active secondary market. We actually compete with the U.S. Mint, and we also sell their products.
My time has expired.
I thank the gentlelady, and I will go on to Mr. Schweikert from Arizona.
Thank you, Mr. Chairman. And this one may be a little slightly off topic, but for those of you who also sell larger numbers of product, curiosity, do you buy hedges on the cost of your commodities? And that's where...
What's the question again, please?
Buying a hedge. So let's say you're about to order...
Yes, we do hedge.
Yes. Hedging is part of the procedure, the policy, the business of carrying bullion products. And the whole purpose of hedging, of course, is that we don't play the market. We aren't speculating. So it's an additional cost involved in trading of precious metals, specifically the U.S. Mint bullion coins in this case.
Mr. Chairman, then the second part of the question is, how do you buy a hedge if you're not completely sure about how much product you're going to be acquiring?
No, when we know exactly what we're going to buy, we hedge that exact same
Okay, so you're hedging actually once you know what inventory
Correct.
you're going to, your
Correct.
fulfillment.
Otherwise, we cannot hedge, yes.
Is it?
Sure. The point of the hedge in the respect of buying the product is that you buy product to have live so you can provide immediate delivery. So you do know the number of ounces that you're purchasing, and that's the same number that you're hedging. In other words, you're taking the opposite position in the market against your long position, and so the hedge is a number that you always do know.
Mr. Chairman, part of the question was more based, I was concerned that you were having a fulfillment issue of product after a time you had already hedged your risk.
My point in my testimony was that we were informed on the silver 5-ounce coins. We were informed of our location on one day, and then the following day we were told that this is canceled.
Okay,
so
you beat me back to my notes. So, but that was an anomaly that happened.
Correct. It never happened before. Yes.
Okay. Anything else you would want someone like me to know about how you do those mechanics?
It is not really significant for that particular purpose, really. It's our problem of hedging or under-hedging, but it has nothing to do with improving the Mint's performance, no.
Okay. Mr. Chairman, thank you. That was actually the question I had. I yield back any time I have.
Does the gentlelady from New York care for 5 minutes?
Mr. Chairman, I yield back my time.
Okay.
President, thank you, sir.
Ms. Maloney, did you care to follow up with another question? If you would, I yield to you.
Yeah, yes, I would. I was interested because we are facing a job crisis here in America. We need to employ Americans. And so I was curious, although Australia is a wonderful ally, a wonderful country, why we were doing that. And I was told that while Gold Corporation in Australia supplies several different precious metal blanks, they are the only supplier of platinum blanks and half-dollar silver proof blanks. So if American companies can't supply what they're supplying, then there's a reason why they're going there. So I'd like to ask you, Mr. Hansen, why you or other suppliers here in America are not making that available to the Mint.
We have offered. We're qualified to make, and there's a number of manufacturers in the United States that can make blanks, both platinum blanks and silver blanks. And I asked this question directly of the former director of the Mint, and he said it was not a priority for them. They said that this is a global marketplace and that they source globally, and their priority was not to source in the United States. that was the explanation that was given to me.
Well, thank you. I wanted to clarify that. Thank you.
If there are no other questions, this hearing is adjourned.
Amy, how are you? You did a good job. Thank you. I just can't make sure you didn't get arrested. Well, can you guarantee that yet?
I've got a busy video about the Chinese counterfeits.